All right. Hello, everybody. Welcome to a virtual meeting. We are not in the studio today. What's up, guys?
Hey, we're shaking.
Where are you, Chris Dunn?
I am at a resort for a crypto conference and just hanging out, having some cafe con leche, looking at Twitter, trying to decide is this a good thing that Elon owns it now? What do you guys think?
I think change is good for Twitter. Twitter needed change. You can say what you want about who owns it now, but at least look, it looks like they're going to move fast on new features, which I'm kind of excited about as a long-term Twitter user. So whether or not, it raises the amount of revenue they need or whatever, I don't care so much. I'm just excited to see some product changes at Twitter finally, and maybe they'll actually get more efficient.
Do you see?
Yeah, it seems like they unshadow banned a bunch of people too. Like one of my buddies, Tone Bays, I couldn't see his tweets for the longest time, and it seems like they're kind of releasing the stranglehold a little bit.
Do you see Elon maybe taking it back public eventually?
Oh yeah, I think he'll have to. I mean, it's really hard to flip a deal of that size. So eventually he's going to, unless it's just a, cash flowing dividends to Elon and the other owners, they'll want to flip it at some point to someone else. And with a deal of that size, it's hard to flip it to another private equity firm. So you're probably going to have to take it public again at some point. But it could be 5, 6, 7, 8 years before that happens.
What if he really turns it around? That'd be something.
I think it's a real possibility.
This morning, was it today or when was he? He was tweeting recently about $8 for the blue check mark to basically get verified, $8 a month. This is here. Let me pull this up. So he says Twitter's current lords and peasants system for who has or doesn't have a blue check mark is bullshit. Powered to the people, blue for $8 a month. Price adjusted by country proportionate to purchasing power parity. So basically, poorer countries will pay less. You'll also get priority in replies, mentions, and search, which is essential to defeat the spam and scam. I agree with this. I think that the spam is just out of control. Anytime someone in the crypto or finance space tweets, it just gets blown up with, frauds. And so that'll, I think, help a little bit. What do you guys
think? I can't believe no one's talking about this. Isn't that the scammer tweet we've seen over the last couple of months?
Yeah. How are people not exploiting this? Yeah.
Yeah. No, I agree.
I don't know. I mean, could $8 a month work?
I think so. Yeah. And it's also, there are other things besides the check mark that'll be included in Blue. I mean, Blue is already, technically a feature. You don't get a whole lot with the current set of Twitter Blue subscription features, but I like the idea that they would add, ways to get verified and also like other features as well. And I think, there's a lot of disagreement over whether or not like people should have to pay for verification. But I think if you put that aside, like, I think, first of all, it doesn't mean that they can't also add features to do bot filtering or spam filtering for people who don't pay as well. And I think hopefully they will do that. There's a lot of low hanging fruit, I think, where they can actually eliminate a lot of bot activity just with basic algorithms. And so I hope they do that. And then I hope, the Twitter Blue becomes a better experience. And yeah, $8 a month seems reasonable. I mean, for, US prices, that seems pretty reasonable. I'd pay it. I think a lot of people would pay it. And again, I think the biggest thing for me isn't necessarily the specific features, because it sounds like Elon and company are willing to iterate on those features and basically test things out, which is great. I'm just excited that they're going to actually start working towards making the product much, much better in a much faster time frame.
Absolutely. Well, we'll see what happens. Let's talk about earnings and what has been happening during earnings season. So here we are. What is today? We're going into the 2nd of November. So there have been a lot of big tech released last week, and we've had Airbnb and SoFi and Uber and stuff yesterday. What's the general vibe out there this week? Has it changed? More bullish, more bearish, kind of a mixed picture? What do you guys make?
Yeah,
I think take it.
Sure. Yeah. I mean, I think last week, the big headline was big tech disappointments outside of Apple. Apple still delivered the goods. Apple showing that they can still run a company efficiently and still deliver lots of cash flow and also deliver a lot of returns to shareholders through buybacks and dividends, et cetera, while still growing. And so Apple's kind of become the model. The other big techs are bloated. And it's very clear now in the financials that it's not just, we're laughing about all their employees on making TikToks where they only work 5 hours a week. It actually is showing up at the financials. Google's earnings and operating income declined over 20%. That's despite the fact that they're still growing revenues. So we can talk about, oh, well, there's an ad recession coming and things are weakening. Yeah, sure. The top line isn't growing as fast as it was a couple of quarters ago. But the real problem is that they're letting expenses run out of control. And you see this at Google, you see it at Amazon, and you certainly see it at Meta. And to varying degrees, obviously Meta is the worst because they have their Reality Labs project, which is, losing just a tremendous amount of money, increasing amounts of money, and they're doubling down on it. But even Google hired the most employees I think they've hired in many years. It was like 12,000 employees last quarter, despite the fact that they said in Q2, we know that the ad market's slowing and we're going to start working towards, a more efficient organization. Well, they're not showing it. So so the stocks got punished, and for good reason. And now you're seeing earnings estimates come down for a lot of these big techs because, you really can't forecast growth in earnings into next year, even if they're having an expense problem. So that's really the big story about big tech. We have seen some more positives among some other companies reporting, like Uber, for instance. They're actually increasing their profitability a lot. So they beat estimates on profitability. SoFi as well today. It'll be interesting to watch some of the other ones later this week, PayPal, Coinbase, et cetera, to see how they're doing. But, overall, I think it's been a bit of a mixed bag when you look across, the hundreds of companies that are reported so far. But the generals are getting shot for good reason, other than Apple, like I said.
Talk about Meta and the Metaverse. So I've been spending quite a bit of time over the past couple of weeks just really thinking about this and looking at the current landscape, right? And tell me if you guys agree or disagree with this, but it feels like market sentiment right now is really bearish on the Metaverse, and a lot of people are making fun of it. And you see all the YouTubers. Like I've just been basically doing YouTube searches for Facebook Metaverse. Is the Metaverse gonna win? Stuff like that. And there's probably 95% of the videos I'm seeing are people that are really, really bearish on the Metaverse and making fun of the current state of it and the avatars. And then I found a couple of videos that were actually pointing out, some of the things that could actually really work and some of the really cool features, where one thing I saw was you could scan your face and it basically, instead of having some 1990s looking avatar, it actually does a photorealistic version of your face. And it looked actually pretty cool. And so I just wanted to ask you guys, do you think that the future for the Metaverse is bright? Are people actually going to use it? Or is this going to be a thing that just corporate cronies are kind of forced to use? Or are people really going to enjoy it? And is Facebook going to be able to pull this off financially and basically save their company? Or is this something where they're just going to burn money for years and years and then eventually have to shut it down? Any opinions or thoughts on that?
I have some opinions on that. So it definitely is feeling very split, the sentiment around the Metaverse, because at least from my perspective, I hear the bearish sentiment and people saying, I'm not going to live with a headset on my head. Like, that's ridiculous, right? That's how most people are viewing the Metaverse. And then there's the flip side, and there are people that say that are maybe in the gaming world that are pretty excited about it, or people that are seeing specific use cases that are going to help them with things like, uh, with work related issues, simulations, things like that. So it feels very split. And I think that right now Zuckerberg has a lot to prove. But I think that more so of it being us living with a headset on, I don't think that's what Facebook or Meta, sorry, is trying to accomplish here. I don't think that's what they're seeing. I think it's more so specific use cases at specific times that maybe we may put on a headset or put on glasses to do something like go into a meeting or do some type of simulation or do a specific game, play a specific game, do a fitness game. I actually saw a really interesting use case about the fitness side of the metaverse. And Meta tried to acquire a fitness company for the metaverse. And of course, antitrust is blocking it, or did block it. And it actually was like, wow, I was looking at it and I was thinking to myself, this would have been an amazing acquisition to help them, push this along. And so that was kind of unfortunate, but I saw the vision, and it was something that I actually got excited about, similar to the way, Chris, you got a little excited about the use case that you saw. So I think that it's more so, he's got a lot to prove, but there are going to be interesting use cases for it that I think people just can't see yet. And I also think that he's envisioning more of like a glasses situation eventually. Right now, there's the bulky headset, but eventually I think he's envisioning the glasses and something more low pro and easier to kind of put
Yeah.
on and get into. But I mean, look, I hear the bear cries. I get it. Like he's making a huge risky ass bet on the metaverse. And the question is he going to be so headstrong about it? When I heard him talking about it, he was like, look, I listened to his interview with Joe Rogan, and he basically said, I am not, like, in a nutshell, I'm not going to listen to the naysayers. Like, this is the vision I have. I'm going to work towards it. People didn't think the email or the internet was going to be a thing back in the day. They thought, that was going to be stupid and no one was going to use it. And look at us today. And that's kind of the sentiment that I got from him. And so I don't think he's going to let people dictate too much what he does here with the metaverse, and he's going to push through with his vision. But he also mentioned, but I know in the same breath, but I know I have to watch shareholder value. Like, I know I have to, not destroy my company. So we'll see what strings he pulls in terms of keep protecting shareholder value and growing his vision.
Trav, what do you think?
Yeah, I think it's going to be interesting to watch. A couple things I'll point out there. Nikki, by the way, great thoughts. Yeah, I think we've seen some slices here and there of things that look a lot more interesting than what we saw from those like initial avatars, which were being panned, and laughed at worldwide. And, it makes for great viral tweets. But the reality is, like, Chris, I saw what you saw, which is they actually have iterated it on the ability to, for instance, like 3D scan a face and make an avatar that looks almost like totally photorealistic. And so I think actually this joke about them having these like silly Second Life looking characters is not going to be even relevant by this time next year. So they're making rapid progress on certain things. The other thing you look at, like, the YouTuber Marquez Brownlee posted a video showing kind of like one of those use cases you were talking about, Nikki, where you've got like a 3-monitor setup that's completely virtual, right? So you're actually like replacing hardware. You're like creating new use cases in the corporate environment, creating essentially a better Zoom. So there's like companies within the company here that could be created off just like some of these individual use cases. And the technology is getting rapidly better. And they've got some interesting technology they acquired as part of the metaverse stuff, like Control Labs. I think we still haven't even seen a lot of what's to come. That being said, look, they've wiped out all their free cash flow for the year. Well, I'm sorry, not for the year, but basically they went from earning about 8 to 10 billion of quarterly free cash flow. And now this last quarter that they did something like less than 200 million of free cash flow. So, which is a rounding error basically to what they were generating. So I think the board at some point is going to have to push on Mark and say, look, the stock's down 70% year to date. People don't believe you can still go after the metaverse, but you've got to be able to throw investors a bone. I mean, even employees have a lot of stock in the company, right? So you lose a lot of employee morale when your stock's down 70% year to date and people look at their underwater options. So I think at some point, they'll be forced to rein things in at least somewhat. And whether that is, in the first quarter of 2023 or in 2025 is the open question. The market cap today is about 250 billion. Again, this was a company that previous to all this investment, it's not just the metaverse, by the way. The metaverse is losing about 12 billion this year. Meta's expenses are up something like, I think, 20 to 25 billion with revenue slightly down. So for the year. So it's also all the investments they're making in Reels and in AI to try to compete against TikTok. It's probably some extra bloat that they just messed up on planning for as well. So it's a multi-pronged problem on the expense side, and it's not just metaverse. So, but they will, I think, be forced to at least have some discipline. $250 billion market cap used to be able to do like 30 to 40 billion of free cash flow. Now it could be as low as, 0 to 10 or 0 to 15 next year. And if you can get back to the previous levels of cash flow generation by 2024, 2025, the stock is cheap. If you perpetually run for the next 6, 7, 8 years at almost no free cash flow, then this thing is a value trap and it's dead money.
Yeah, I guess that's the big question, right? Like, is
Mhm.
this a great dip buy opportunity when it's 75% off of all-time highs, or is this just going to go into a death spiral? I think you both had really good points, and Nikki, I agree with what you said about like things basically need to get to the point where it's like as easy as putting on like a pair of sunglasses, right? Like even the one that that MKB was wearing on his latest video, it's like even that I think is too bulky. So I don't know, but I think this was an excellent video. It was fair. He talked about some of the good and the bad. So if you guys haven't seen it, maybe we'll link this in the description. But
You know what's
yeah, I don't
funny
know.
though? Like here we are with these bulky headsets on. Like just
Hey, speak
imagine
for
if
yourself. I've got these little things right here.
we
Little
have to
Apple
like
AirPods.
get these mics set up and get this headset and put
Mm-hmm.
it on our head, and it's like this is pretty bulky stuff. Like imagine if there was something streamlined that little earbuds and a little glasses thing, and
Yeah, hello.
yeah, but like it's all a one thing, and you just plop it
Yeah,
on, and you're in a conference call. I mean,
yeah.
who knows? This is one of those things that, and I said this in the community. It's an in Zuck we trust type of situation. It's like you either want to take a bet on his innovation and his brain and just everything he's done like historically, and you want to take a bet on that he's going to do that in the future again. Or
Oh man, I cringed when you said those words, like in
you're
Zuck we
taking a
trust.
bet
Like
on Zuck.
not a lot of people trust him. I mean, all
I
the
know,
privacy
but
issues and
totally. But this is really a bet on if he can pull this off or not, in
yeah.
a way.
I don't know. Okay, so let's I don't know. Let's make some predictions here for the sake of the show. Are you guys optimistic? Is Meta going to win? If we fast forward 5 years, where are we at?
I think Meta stock will be higher. I don't think the metaverse is going to turn out to be as big of a platform in a 5-year time frame as they're hoping. But I think the stock will be higher. I think they'll be forced into some discipline on the cost side, and the real stuff, the WhatsApp monetization, that all continues. As long as they can get the cost back in line with the growth of the business, then the market cap here is just too low. And so I think you've got a potential for a lot higher stock. I still own some. It could be a really tough slog over the next 2 to 3 quarters, but I think looking out on a 5-year basis, that would be my prediction. I think Meta stock's higher.
All right, Nikki, higher or lower?
Higher. I
Higher.
mean,
Okay.
I agree. I agree with a lot of those points. I think that there's more to like than to not like about Meta stock right now. I think that first of all, when ad spend starts to come back, when the people have more clarity on the economy and ad spend starts to come back into the business, that's going to help them out. And also, I think that they have levers to pull. If he can pull back on this metaverse stuff and the spending if he needs to. So I just don't think that Meta as an advertising platform is going anywhere anytime soon. I think it's a very important platform for small, medium, large businesses. And yeah, I just think that there's more to like than not to like here.
Okay. Well, you heard it here, guys. New all-time highs for Facebook in 2023.
We did not say that.
All right, let's do a chart speed run, shall we? Let's take a look at all the markets. Let's do some TA. I know people are like, okay, Meta's great to chat about and all, but what are the markets doing? So looking at the S&P 500 on the daily chart, we've had quite a bit of a bounce from the October lows. So the markets were about 12% off of the pivot lows. Right now, we're into the 100-period moving average resistance area, and we're still making lower lows and lower highs. So I think this is kind of a really key zone in the stock indices. You can see the NASDAQ hasn't really been playing keep up with that. We're still kind of well below the 100-period, and we've got 11, call it the 11,700 area as resistance. And then Bitcoin has still been I wouldn't say in exact lockstep with the stock indices, but it's also testing. Look at that, the 100-period moving average, like the S&P 500. And so we're now kind of squeezing in between 20K that was resistance and now turned into support, and 21K as resistance. So I think that we are going to start to see some really big moves over the next, I would say within the next week, we're going to get another push, right? I felt that way down here when we were at 19. We had just a couple of days of a kind of a big pop on Bitcoin, but right now we're consolidating and coiling even tighter. So I think we've got a big move coming. What do you guys think is going to happen off of the moving averages and the indices, or is it kind of a 50-50?
It feels very 50-50 to me, but I'm leaning more towards we retest the lows. I think that uh, valuations in the stock market are still, even though valuations have improved, um, we're still feeling a bit pricey for what we've got going on in the economy, and with the Fed continuing to stay strong on hiking and holding until the market knows that the Fed, I think that the market is calling the Fed's bluff a little bit. They think the Fed's going to pivot sooner than they said, but I just don't know. We got to hear kind of what Jay Powell's um, comments are. We got to hear how he
So
sounds
you're leaning
versus.
more fundamentally driven over technicals. You think that the fundamentals are actually going to drive price in the
I
short
think
term more so
I
than
think
the
they could.
technicals?
Yeah, I think that they could. Technicals. I was looking at the ES, the S&P 500, and I was thinking when I was looking at it, I could see us rolling over from here and retesting the lows.
Yeah.
But uh, but will the lows hold? Right? It just could. I don't know. It's just a 50-50 here for me.
50-50 for Nikki. Travis, what about you?
Yeah, I'm looking to probably lighten up on more stuff around the 4K level S&P. I also think, just looking at earnings fundamentals so far this earnings season, we do see a continued deceleration in earnings as we saw in the second quarter as well. So while we're not at like crazy valuation levels, and maybe you have upside if the Fed only does 50 bips at the next meeting, or starts to slow down rate hikes, you might get some short-term moves upwards. I think fundamentally, we're still kind of deteriorating when it comes to earnings overall. And especially when you look excluding energy, like in the S&P 500, earnings are decelerating faster. And the 2023 and 2024 earnings estimates have started to get pulled back by Wall Street analysts. And so now the growth estimates for 2023 are getting pulled in. So it still, to me, looks like I don't see a reason for like a fundamental change in view. But it's going to get muddier. It's going to get messier into 2023 because you probably will have inflation continue to kind of like decelerate. And then maybe the Fed steps off the accelerator a little bit. And then we're in this period where is it like, it's going to be still choppy. Like, oh, like, is the economy improving? Is it getting worse? And we're going to be seeing mixed signals. And like, it's going to be really tough.
We're in purgatory for a while, it feels like.
Yeah.
That's why I'm like 50-50. I don't know. Like, it's just too hard right now.
Yeah.
Yeah.
So I think the strategy of just sort of incrementalism, like we talked about, where you add to the stuff on when things are really weak, and you let some go when things rip. In these bear market rallies, you maybe put on more hedges when the thing rips, and vice versa when it's low. It's just it's a tough environment. But I would say looking at the earnings fundamentals, we're still deteriorating here. So.
Trav,
Doesn't look that great.
I wanted to ask you about this because I actually I tweeted the FactSet image showing the energy, basically earnings growth x energy, right?
Mm-hmm.
Is without energy's holding up earnings right now.
Yes.
And
Yes.
I was looking at net profit margins of like the big oil companies like Exxon and Chevron, and I was thinking about, okay, well, what happens if we do see a deep recession, oil prices do end up cratering, and in turn, profitability comes down. I still think that, energy companies are going to continue to see profitability even if oil comes down a bit. But like, how much of an impact would that have on Do you think energy can hold it up if we see, prices turn over in a recession is basically what I'm asking. You
It's gonna
know,
be, yeah, it'll depend on obviously how much energy prices pull back. Like if we get a 2008 pullback in crude prices where it's down, what, 50, 60% in a number of, probably 6 months, then those energy stocks are not holding up and energy earnings aren't holding up. If the question is, can energy like keep the S&P earnings growth going? Energy's still like less than 10% of the S&P weighting. So it's just not big enough right now. But a feature of the S&P is that obviously the weightings can increase over time as things do well. It's sort of like almost in a certain sense, like momentum driven. So earnings or energy stocks could actually increase their weighting, which might actually help over time the S&P 500. But yeah, I think it's tough with energy because, yeah, like you're not the master of your own pricing. And in a real deep recession, oil prices can get cut back real fast. But I think something that's working in energy's favor this time around, the SPR is going to need to refill. You still have, questions about like what OPEC and the Saudis are going to do from a supply perspective. Demand's still growing globally. You could have China come back in more full force economically, which is going to put a bit under demand. So, I think it still looks okay for energy, but if we go into like a much deeper economic recession, then I think you could have some troubles there.
so it sounds like there's enough on both sides of the spectrum right now to just kind of keep things calm and going, right? Like if China comes back online, that'll kind of offset recessionary pressures, et cetera. And I am in the camp that energy prices or oil prices specifically are going to stay pretty stable. If we just don't want to see them go crazy again, because of course that hurts the consumer. But yeah, yeah, all great points. That answers my question.
Awesome. Let's do some Q&A. Nikki, I think you had some questions that were submitted to the show through wetalkmoney.com.
Yeah. So one of the questions was, which trade setups do you take for each market cycle phase in crypto land?
Wow. Well, that could be a 2-hour show in and of itself, but I'll just give you guys kind of the high level overview of the trade setups that I use in crypto market cycles, right? So there's really 5 phases of the cycle. It goes from accumulation to early trend to parabolic blow off top to fast crash and reversal, and then choppy kind of extended bear markets, right? So when the market is in accumulation ranges where it's way off of all-time highs, I accumulate. So I love to buy Bitcoin when it's 70 to 80% off of all-time highs. I buy it, I put it on cold storage, and I don't think about it. And I just want that stack to grow over time. And if Bitcoin continues its logarithmic growth, its exponential growth to $1 million a coin, then I might be one of the richest people on the planet. If it doesn't, okay, that's a possibility too, right? The other capital bucket that I have is for swing trades or cycle trades, where I'll, in the phase 2, where there's early trends where you're getting runs and retracements to the upside, I'll buy dips, I'll buy breakouts, I'll take bull type setups, right? Very, very simple. When things are going parabolic into euphoria, like the spring of 2021, that's where I'm selling, right? And even though we didn't get a true like parabolic blow off top, market sentiment at that time was really, really extreme. So I took a lot of profit off the table. On the fast crashes, you can try to short, it's riskier. And then during the choppy extended bear markets, that's typically when I'm doing the least amount of actual trading and the most research and prep for the next market cycle. And that's also where I'm looking at more startups and just really looking for like, what is the next narrative going to be? What's the next driving force behind the next market cycle going to be? So that's kind of an overview. Obviously, I have a full like 8-week boot camp that goes into a lot of detail and shows all the setups and the management with that. But if you can just train yourself to think about where are we in the what phase of the cycle are we in, and look at things from the 30,000 foot overview, and then make adjustments to your trading strategies based on that, that right there is going to put you ahead of probably 80 or 90% of traders. So yeah, hope
Agree.
that's helpful.
Know your
What's the
market
next one?
environment.
That's
The
right.
next one is Price asked, how long does it take to be good in investing and trading? It's a lifelong skill, but how long does it take to be proficient?
Oh, that's a good one.
Yeah.
Travis, how long does it take to become a master investor?
That's tough. I guess it depends on, how much time you have to devote to it. If you're doing it full time versus, on the side, I would say, it probably takes a good 5 to 10 years to actually get enough, swings at the plate, so to speak, or enough repetitions to really be able to develop the pattern recognition and the expertise. And I would say that's probably a good benchmark, about 5 to 10 years in my view. Now, again, that's probably center of the bell curve. So if you have much more passion and time to devote to it, maybe you could do it faster. And then, others, maybe it takes longer because they're doing it part-time, or they make a lot of the same mistakes and they don't get help, or they don't learn from the right resources. So middle of the bell curve, probably 5 to 10 years at a minimum. But honestly, I think, the great thing about investing too, is that if you start younger, you've got decades to kind of perfect it. Like, I'm going to be going into my sadly third decade of investing experience here pretty soon. And I think I'm hopeful and optimistic that this will be my best investing decade yet. And I've had some pretty big winners in the past decade, but this next one is really when I'm hoping to like knock it out of the park, so to speak.
Why is it
Awesome.
sad that it's your third decade? That's a good thing.
Yeah, it just dates me a little bit, right? I'm getting old.
Well, yeah,
We're,
aren't we all?
we're lucky to be able to do this, right? Like I think about, like, would life change if we each had like an extra $1 billion in our bank account? I mean, I think like some things would change, like we would fly on private jets instead of like business class, but like, I think we would probably still be doing the same thing we're doing right now, right? And that's what I love about investing, is like it allows you that ability to live your perfect average day. So the fact that you're going on a third decade of being an investor, I think is just amazing, man.
Thanks.
It's
Good way
it's
to put it.
pretty incredible with investing and trading. I mean, I think more so investing. How much there's always something to learn. Um, Market environments are always changing, and macro data is always coming in different combinations, and it's like even though they say like this time is different, like yes, we've seen everything before, but it's always interesting, all of the new things that you do come across, even if you've been in the markets for a long time. So it's constantly a learning experience, and you're always going to be feeling like you have something to learn. But yeah, Trav, that's a great point about the time that it takes, and getting with trading. I think it's a little bit different. Trading probably has a shorter, I would say, learning curve than investing. Would you guys agree or disagree with that?
I guess it depends on like what time frame you're talking about, right? Like I've literally got the 10,000 hours of sitting in front of charts, and so it took me many years to get to the point where I'm like, I have ultimate confidence in my ability to trade, and also to recognize like when market conditions change. But it's like you said, I mean, it's a constant game of improvement and learning, and like if you ever feel like you've made it, or you've arrived, or if you ever start calling yourself something really stupid like a master trader, you're in for a bad time, because the markets
Mm-hmm.
will humble you, right? And the second that you think you've figured things out and that trading is easy, well, yeah, they may be for a specific strategy under current market conditions, but market dynamics are changing, right? The competitive landscape is always changing, technology is changing, your ability as a trader and your skill set, your mental fortitude is always in a state of change as well. So I don't know, that I just love it. It's probably, I don't know, I couldn't see myself doing anything else, but it's one of those things that, just don't get cocky, because you will get humbled.
Yeah, I think, like, to answer the question, it's basically you're always going to be learning. You're never going to feel fully, full complete mastery in this game.
Yeah.
There's always something that you're going to be finding out, I think.
Yeah, and the cool thing about it is like you only need to get rich once, right? Like compounding and like being consistent as an investor over decades is very, very important to grow your wealth responsibly. But like in business and trading, like you can build one business and have an exit and make hundreds of millions of dollars, or you could be a trader and in 1 year make life-changing gains, you know. So it's like that constant pursuit. It's that hunt of the next big trade. It's the hunt of the next big thing that really just gets me going.
Here, here.
All right, guys. Yeah, awesome. Well, look, we can wrap it up there unless there's anything else you guys want to talk about. But I've got a conference to get to, and I know, Trav, it's middle of the night for you right now. So
ain't nothing, baby. It ain't nothing.
yeah.
Up all hours working. Grinding.
You're a night owl anyway, so
that's right. Yeah.
Cool. Well, we'll keep our eye on the resistance area that the indices are at and the squeeze that's happening on Bitcoin. And I think we're going to start to see some big moves in the next few days, or at least by next week.
Pray to J-Pow.
Be
yeah,
dovish.
by the time this comes out, yeah, the interest rate announcement is going to be out probably a few hours after this show goes live. So what are we thinking? Is the 75 basis point hike coming, or is it going to be lower?
I think it's 75, but if it's lower than 75, we're going to get one hell of a rip. So it would be fun either way. Or it certainly would be fun if we don't get 75. I think we'll get 75, and then the Fed will start talking about, yeah, maybe it's time to start considering, you know, lower rate hikes, but we could end up higher next year. You know, they're going to hedge their language, I'm sure. But damn,
they're
if they
just
do
gonna
50,
say, yeah,
let's party if they do 50, because the market's going to rip. My hedges won't like it, but
they're just gonna say we're taking the data in as it comes. That's what they're gonna say.
Exactly.
Is that your Fed voice?
That's my Fed voice. Yeah.
Sounds
It's
very
my man
professional
voice.
and balanced.
I love it.
Cool. All right, guys. Well, look, thanks for watching the show. Make sure to subscribe to the podcast on iTunes or Spotify. Submit a question for the show through wetalkmoney.com. Check out the wealth building community at wetalkmoney.com/community. And thank you to Nikki and Travis for being the awesome voice of reason and analysis on the show. All right, guys.
You guys.
Take care. We'll see you next week.
See ya.